people have joined. Welcome everyone to this webinar with Sune and myself about what we call what you should know about financial crime prevention, which I know is a fairly broad title. Just as a few intro remarks, we are recording the session so that anyone who wasn't able to join today, they can watch it later. You can rewatch it if need be. Also, for those that are joining live, there is a Q&A button that you should use for any questions you have. We'll take them as we go, or maybe even at the end of the webinar, a little bit depending on timing. So just use the Q&A button and not the chat button. And then just a quick overview of the agenda. We actually expect that this will take around 30-35 minutes. So not necessarily the full hour, a little bit depending on questions, etc. But trying to give back a little bit of time. Other than that, the agenda is actually beyond an intro of myself and Sune. It's going into obviously how Avallone services our customers with managed services. That's not the key point of today. The key point of today is what are our learnings in terms of running a smooth KYC process. Also going a little bit into the differences between doing it in-house and delegating that responsibility. How a framework should look like, how the process should look like, how the documentation should look like. So really trying to empty Sune's brain in terms of the experiences over both from his banking career and over the last couple of years in Avallone. So with that in mind, I'm ungracefully going to start with introducing myself and then getting to you soon afterwards, because now I'm speaking. So I'm currently CEO and co-founder of Avallone, and I've been that for almost 5 years, since the very beginning of it. Before that, I've worked more than 20 years in banking, 4 years in Danske as head of group compliance out of Copenhagen. And then 17 years before that in Nordea, latest as head of op risk and compliance out of Stockholm, but also more corporate roles on the large corporate institutional segments. So as I usually say, I've seen more money laundering than I care to admit, but also proud of having learned a lot in that context, especially related to more complex KYC. And I'll be kind of the host today, but even more so a discussion partner with Sune, trying to kind of get around this subject as efficiently as possible in the time we have. Sune, a quick intro of you, please.
Yes, hi. Yeah, I'm Sune, and I'm responsible for our financial crime prevention services and customer success team at Avallone. My background is that I have been in banking for 23 plus years. Before I started at Avallone 4 years ago. The last 10 years, I worked a lot with operational risk, compliance risk, and financial crime prevention risk. My last job was SVP for the group for suspicious activity reporting, but I also worked a lot with KYC and training within the financial crime area. So that's kind of what I bring to the table for this discussion today.
Thank you, Sune. So knowing who we are, I just wanted to, before going into the discussion, set the scene around what is Avallone and why do we actually discuss financial crime prevention processes when we are a technology firm. So at our core, we are a technology firm delivering a platform that helps corporates, funds, and NGOs with two distinct KYC processes. One is KYC response, so enabling our clients to respond to the KYC requests coming at them from banks and other third parties or counterparties. This is especially for those that are multi-bank, so corporates with 5+ banks and up, more complex funds with a lot of funding needs where they need to share a lot. The other part is the more conventional part of KYC, which we'll also discuss a lot today, which is what we call KYC collection, but it's really the task of collecting data from your counterparties, so that be customers, investors, suppliers, co-investors, you name it, and work with that data in terms of screening for advanced adverse media, PEP sanctions, risk scoring, ongoing due diligence, and the whole outreach part. So that's the respond and the collect, and that's why you probably hear us today talk about respond, collect a number of times. So that is the core of the technology. On top of that, we deliver a advisory and managed service business, and really what that is about is being able to help our clients set up the framework and simply get started, and thereby creating policies and procedures, SOPs, etc. But even also for those clients that need an extra pair of hands running that process in various levels, so they actually delegate part of the work to us. We have plenty of customers only using the technology, only using the platform. We also have a good number of customers using the managed services and advisory, but typically we don't have the last part if they don't use the platform. So we can't help our customers if they don't use the platform, simply because that's where a lot of the efficiency and the quality is also benefiting our customers. So that's who we are and kind of the context of why we're discussing this. Don't see this so much as a, hey, you should use Avallone for your KYC processes. We would love to, obviously, but just as much as a discussion around what do you need to have in place to run a strong process, and it's a delegation, a non-delegation discussion, right? So you can delegate to Avallone or someone else, but also a little bit having that discussion whether to keep it in-house or delegate. So with that intro in mind, Sune, could you talk a few minutes around kind of the history? So why did we start this, and then move into like how are your definitions of the managed service and the advisory part, please?
Yes, of course. So as you said, first of all, we are a software company, and we started out as a software company. We started with the responder part, and then we moved into the collector part, which is the more traditional KYC discipline. And I think we quite early saw that you can make a really good tool, a great tool, but you also need the competences in the company to benefit that tool. And what we have seen is that especially non-regulated companies which are doing more and more KYC and screening, but also smaller regulated company don't have a lot of know-how in-house, and that kind of meant that even if they got the software we provide, they wouldn't really know what to do with it and start with it. So therefore, we had a customer asking us, couldn't you help us doing this? And then we thought, yeah, maybe we actually can, because we know a lot about this. So instead of just using the knowledge for building the software, now we also use the knowledge to help our customer to handle the actual task if that's their need. So going into the definition, so for us, managed service is kind of where we do the ongoing task. So that could be handling screening alerts, it could be handling KYC requests, information come in, validated, risk scoring, all that kind of ongoing daily work, which takes a lot of time. So that's the managed service part. The advisory service part is more where we help our customers to do some advice. So advice and discussion about the discipline, but it could also creating the framework, creating the process. So kind of make all the relevant documents and description of how to run the process. So meaning we kind of a bit more consultancy-like in that task we call advisory service, where managed service is the hand-on. Yeah. So that's kind of how we do it.
Yeah, thank you. Sorry, I just had to unmute as well. So, and maybe a few words on, because the majority of the team we use for managed services, they're located in Vilnius in Lithuania. Maybe a few words on why we have located the team there.
Yeah. So first of all, we already had a team in Lithuania before we started managed services. So we quite early knew that we wanted to hire some people who knew a lot about the discipline in financial crime prevention. And the reason why we started the team in Lithuania was simply that we knew there's a lot of talent there that knows a lot about financial crime prevention. Several of the large banks, but also some other tech companies are setting up professional centers for financial crime prevention in Lithuania. So we thought that it is a place where there's a lot of strong talent, maybe even better than, for example, hiring in Copenhagen. And I have been used to working with people from Lithuania from my time in Danske. I think the same with you, Anna. So we also knew that it's some good people to work with. Yeah, so that's actually why we do it.
Perfect. Thank you. Okay, then maybe taking a step a little bit further into kind of the fundamentals of the framework, and I guess this is where we start on the more advisory side, and what do you need to have in place in order to get started? Maybe Sune, if you could say a few words on what are we looking at here, and how do you work with it? Not just when you work with it, but how would you recommend if a client would do it themselves, what they need to get in place in order to get started?
Yeah. So we have tried to build framework with customers many times now, and I think in general this model on the screen really makes sense. Where in principle you start from the top and then you work down in the pyramid. Of course, depending on the size of the company and the maturity, you will have more or less work to do in the different things. But we truly believe that the first thing you should do is to kind of understand what's the risk of your company. So what are you trying to avoid to do, or what kind of risk do you want to mitigate? And that's doing a risk assessment. Now that seems like a really big theoretical task to do, but I think it's actually not. I think you can do a lot with a half-day workshop and some writing. All the knowledge that you need to kind of find to do this risk assessment is more or less in-house. Maybe you need a facilitator like us, but in general, all the knowledge is in-house. And it's also like I'm normally saying, the first risk assessment should just kind of lay out the biggest risk that you can see. Over time, when you start running KYC, CDD, you will get more knowledge, and you can kind of fine-tune your risk assessment over time. But first, understand what risk do you want to kind of mitigate. And then the policy, that's kind of where a high level, board level, you write, what do you want to achieve? You know, what is it you want to mitigate? How do you want to do it? Who's responsible for it? And why do you want to do it? So that's kind of writing that high level policy that should be approved on board level, maybe executive management level, but that's kind of what it is. The framework and roles of responsibility is more about who does what internally in the company and who's responsible for it. So that's kind of where you start. You know, what do we want to mitigate? How do we want to do it? High level. And then you start working with procedures, and procedures is kind of just saying, how do we want to execute? You know, what do we want to do? How does a risk score model look like? So when are you high, low, medium? How often do you want to revisit customers? How do you want to screen? What do you want to screen? Stuff like that. And then if you go down to the guides and templates, that's more kind of really detailed. Not all company needs that, but it's kind of where you really detail, say, if this happens, you do this, if this happens, do this, right? So that's kind of what you do, and you build it from the top. So you make sure that procedures comply with policies, and policies complies with kind of the risks that you see in your risk assessment. It seems like a big task to build, but I think we have seen that in a month you can do a lot in this space, right?
Yeah, exactly. So, and maybe because if we start on the risk assessment, so like how do you start that? Because because as you say, it's you shouldn't start with making 100% solution. You know, it's kind of like, what's your gut feeling? What do you know about your company? But you don't necessarily have all that information in one person, right? So there's some need to get information from the organization. So one question is, how do you go about that? How have you usually done it when you helped, and how would you recommend companies to do it? And then maybe also, what's the usual mistakes you run into? What's the don'ts in the risk assessment part?
Yeah, and I think more or less as you indicated in your first sentence, it's like, don't do too much. It's like, if you think this should be perfect, that's the biggest mistake you can do. You know, nobody nails this the first time. I think from banking, we have seen people working 2 years on a risk assessment without ever really finishing it. So the first thing is to don't do too much. You know, take what's obvious. Is the same goes with the policy and all the rest. You know, find a good starting place, and then you can build on that on the go. With the risk assessment, I think normally what I think really works is kind of make a half-day, full-day workshop. One facilitating, just bringing in all the people knowing about the business and the procedures internally in-house, and then just brainstorm on it. So one facilitating, asking about, you know, how do you operate? What is the mitigating action you have today? What is your biggest concern? It's like simply some open questions, and then just start writing down. If you can get some data, that's amazing. But if you don't, you can still make something that is valid. And I truly believe that what's in the head of the experts in companies is kind of the most important knowledge for a risk assessment, more than taking a lot of data and start analyzing that. That could come over time, but I think starting with emptying people's heads is really powerful.
Yeah, and when you say data, Sune, as you mentioned, you don't need to, but also data can be pretty simple, right? It can be, let's say, if you are performing investments and your main risk is the investment targets you want to analyze. Well, then it's about looking at the current portfolio and saying, what's the geographical distribution you have, right? That's just one data point. It's easy to get, and it forms part of the risk picture, right? And I think also that speaks into trying to get from 0 to 100 in the first go, because then if you try that, you also you get into a rabbit hole of data, and okay, but then we need all kinds of risk to be covered by quantifiable data, which is just not possible, right?
Yes.
And this with, now I mentioned risk-based approach myself, but if you and maybe that's already the answer, right? But what is the main purpose of the risk assessment? Why is it so important? Just to reiterate that.
It is important because you need to figure out where should you spend your time. So, you know, you can't mitigate all risk. You can't remove risk, all the risk, but you can remove a lot of risk. So you should spend your time on where the biggest risk is and where you can make the biggest difference with the resources you have. So I think it's also a way to really understand, should I look at right or left, or should I look at this market area or this market area or this product or this product? So I think that is kind of the purpose of the risk assessment, is to really understand where to use your time and how to use it right.
Perfect. And maybe now we didn't mention that in the beginning, but we talk about financial crime. So maybe just also important to either remind people or tell people that when we talk about financial crime, we usually speak around 5 areas. It's obviously terrorist financing, it's money laundering, it's tax evasion, it's sanction breaches, and it's private corruption. That's kind of the 5 main areas. Typically, we don't include fraud. We think fraud is a little bit something different. But that's the 5 areas we would include in a financial crime risk assessment.
Yeah.
Cool, Sune. Then maybe then going in now we've been in the top of the framework, you know, the risk assessment, the policy, and of course you can stop working at that point. But then you just have some fancy documents that doesn't connect to any actions, right? So So, which we also, I think, see once in a while, that you have a very fancy risk assessment, or fancy, but it's a very well-written risk assessment, a very well-written policy, but there are no actions below, and there's no behavioral changes below, and then you've just paid a lot of money to maybe a law firm to create the top of the pyramid, right? So maybe talk a little bit more on when the wheel starts rolling, what is it that you need to actually get a process up and running?
Yeah, so when we talk about creating procedures, that is more or less design a process and then describe how that process would look like, right? And I think a good starting point is also to figure out what tool you want to use for it. You know, what is do you want some software, because that really defines also the process that you want to run. So I think it's taking some decision around, you know, how do we want to run this process? So you could say, starting with what initiates a process. Is it when we get new customers? But there's also the refreshments of data and stuff like that, the ongoing due diligence. So that figuring out, you know, what to trigger the process, and then start designing how should it run. You know, how do you get the data from your counterparty? How do you review it? How much documentation do you need? Screening providers, how do you screen against sanction list, PEP list, but also I think it's quite normal now with adverse media and different alert lists. And then going into the risk scoring, and which risk scoring model do you want to work with? How does it look like with the enhanced due diligence? And who can decide to approve a customer, right? In the end. So building up the process, but I think often you also need to decide on your tool when you do that. If you don't have some companies, we know it takes a long time to get a tool, right? So you can do it without it. You can do a lot manual. It just takes more time, right? But it's in principle the same processes that you need to consider how to get through.
And maybe on that soon, let's just pause on that. A tool or a non-tool, or running a process without and when we say tool, it's a designated tool, right? For KYC collection and screening. But where would you, if we talk just number of counterparties? So let's say your counterparties would be either investors or investment targets or customers or suppliers, whatever that might be. What do you think is the number where it gets impossible to run a good process
without a tool?
Yeah.
That's a good question, but I don't think you need to have very high numbers. I think, you know, because it's not just about running the process the first time, it's also to maintaining the data, make sure it's GDPR compliant, make sure that you can find the data again, document your processes, and also follow up on the thing. I think just like 50, I think maybe even less. Then you should think about it. I know these tools can be quite expensive, but I think it's also really important that you have a good audit trail in your processes, and you can find the data and use your data.
Yeah, I agree. And we've had these discussions also, especially with fund companies, that like, if they don't have the tool, they do a one-time screening at onboarding of the investor, and then you don't have the monitoring on PEP, adverse media and sanctions, right? So and there's no way you can do that manually. Well, you could go in and then do a manual lookup every week, but then you're at a weekly cadence, right? And then already there you're sacrificing some sort of quality in your compliance. Okay.
Yeah, and also I think if you don't have a system and you are a small company, you don't get that kind of support that the system gives you. So it's like it's kind of, maybe you're too small to buy an expensive system. On the other hand, maybe you will get even more value out of it because you can get started and you know you have a rather professional process, even though you maybe don't have the in-house know-how to really run a process like that. And then of course with managed service it's even better, right? But I think that's kind of it.
So let me just, so we're kind of sharing and unsharing slides a little bit so people don't get crazy looking at the slides, but let me just maybe jump to the next one. And this starts to speak into whether you, as a customer, do it in-house or you delegate it to someone. Can you speak a little bit about how, when you delegate it, how does a process look like, and what should you pay attention to? And maybe also, what's the minimum you can delegate, and what's the maximum you've seen? I mean, what's kind of the breadth of delegation of a collector process?
Yes. Did you share a slide now, Anders, or?
I was trying to, but maybe I didn't. Let me see.
I think it's there now.
There.
Yeah.
Okay, perfect.
Yeah, so this is kind of very high level how a process could look like. So we'll not put all the details, right? But it all starts with initiating a KYC request, and of course end with rejecting or approving a counterparty. So you could say more or less you can do the full process yourself. You will always need to be able to be in interaction with your counterparties. That's kind of the red steps. But then, yeah, so that's kind of, you need to have that interaction. So you can't do everything yourself, right? But in principle, you can run this process yourself. Then if you ask about, how much could you delegate, I would say more or less all of it. What you can't delegate is kind of the risk decisions. So if there is some high risk, maybe even some PEPs or some sanctions entities. I think sanction entities may be easy because then you don't do business, right? But while there's some adverse media, you also need to take the decision as a company if this is something you want to accept doing business with this counterparty. But more or less with the kind of sending out requests to your counterparties, reviewing all the data, approving that the data is good enough, start the screening process, do the alert handling. I think we see it's not that difficult to, it's time consuming, but it's not that difficult to kind of validate that a passport looks right and the data you got from the client was good enough, and also using public data to kind of validate some of the information you get. I think that's not the most difficult part of it. But when we talk about screening, you get often some alerts you need to handle. And I think often we see that people find that quite difficult to figure out, what to do a sufficient alert handling. Often alerts are false positive, but you need to kind of prove that's the case. So that's difficult. Really good KYC helps you with that, but still, it requires skills. And then there's the risk scoring, which you also can get someone to do. You maybe even get help from systems, and then in the end approve the counterparties. So you can kind of delegate the whole process, just not the risk decision, especially on high risk. You need to keep that in-house. That's the kind of my thing. So when we talk,
what's the minimum? What's the minimum you can delegate?
Yeah,
Is
so
that the alert handling, or?
Yeah, I would say alert handling. That's what we see someone saying, hey, we can handle the KYC process, but we want help for alert handling. In principle, it could be some of the other steps. It could be saying, hey, will you help us with the risk scoring? So all of the steps, more or less, you can still help manage service. But every time you keep something in-house, there will be more forth and back between the managed service company and yourself, or the one you delegate to. So you get more advantage the more you delegate, but you can just take 1 or 2 steps and say, this is what I want to delegate, the rest we handle in-house.
And Sune, maybe what would be, and you're biased because you also run a managed service business, right? But what's kind of the pros and cons of delegation versus building it in-house?
Yeah, so I think so one of the things that can be difficult for a company is to get the in-house knowledge that's needed to run a process like that. I think we often see, especially smaller companies or less mature companies, that they are hiring student helpers or junior people to kind of run these processes, but they don't necessarily know how to run it. And maybe they don't have anyone to really support them on it. Then some companies maybe only hire one person who knows a lot about AML or financial crime prevention, but they don't necessarily be the same person who can do policies and risk assessment. Can be also sitting handling alerts. Maybe that's not that easy to find that person who really love to do that. So what we see is the difficulties from a company is kind of building up that in-house knowledge, and it can be quite expensive to build it up. Also because often you want more than one person to kind of keep a professional environment where you can learn and discuss things. So that I think that's the kind of the disadvantage with keeping it in-house, and with delegating into a managed service, you can get a lot of know-how for a reasonable price. Keeping it in-house, of course, helps you to make sure that you have the knowledge in-house. You know exactly how the process is run. You define your own processes. You can easily change the processes, and you have the people. So it's not like a company, you're dependent on a company. Maybe that's not nice. You can have it in-house. So I think both could be good. And then, but I don't think necessarily something about pricing. I think in the end, people will see there's not that big a difference in pricing. So I think it's more about, where do we want the mental workload on this area.
And actually, in that context, we have a question coming in. I think that relates to part of what you said. So maybe to expand a bit on that. So it says, how big a role does it play that it's hard to find strong KYC talent? Is this something your customers take into account when deciding to delegate?
Yeah, I think definitely that is one of the things they're taking into account. Also because if, as it is at the moment, it can be quite expensive to find people who really knows this discipline, especially if you want to kind of cover everything, both what we do in advisory services and managed service. Yeah. So I think that's definitely one of the reasons why people look at this. But it's also, I think it's also to how fast can you mature, how fast can you get up and running. It takes time if you do the recruitment yourself.
Yeah, and I guess depending on the market you're in, but I think what we've also seen in many customers is that there's a pretty high turnaround in talent in markets that are fairly hot, right? So people move on from place to place. So compliance specialist or financial crime specialist, and it's hard to keep up with the salary levels that the larger banks, tier one banks, are paying, right? And I think also, and that's not just for KYC or compliance specialists, but the moment you have one employee doing a certain part or a certain job and no one else is doing it, they start to feel alone, as I think you also alluded to. So where do you get your inspiration, right? Reaching critical mass. But Sune, have you seen so far customers that have delegated it and then pulled it in-house when they kind of reach a critical mass, or do they keep it delegated?
Yeah, so far we haven't seen people taking it back, because I think they really like the service that we are offering, of course. But I would also say it's not that difficult if you have a system like Avallone. Is that if you want to take it back, I think it's not easy. You still need the people, the skill set, right? But everything is documented in the system the same way you would have done it yourself, so you can just take it over. So you're not kind of depending on the tools that we use. I think often you see consultancy firms kind of have a lot of work on the inside that you can't take over, so you only get the outcome of it, and you can't continue the processes. So I think our idea from the beginning has been that if our customer at some point only wants to be a software customer, that's totally fine, and then everything is ready for them.
Yeah, because they have access to the platform, to their own data. They can at any point in time go in and actually also add to the data, change the data. It's their data, right? They just delegated part of the process.
And I think the screening is still running, the monitoring is still running when you take over. Yeah. The engine is there, the data is there, so it's just continue the work.
Yeah, exactly. And I think we've seen part of that problem, and legislation is kicking in. I know at least in Luxembourg here, 1st of January 25, so in a few months, that if you have delegated it to a service provider, your KYC collection, you have to be able to access the data. And I think a lot today actually can't access the data, the KYC data that has been collected on their behalf from, let's say, investors or others. And that's obviously a massive problem, because one thing is, I understand from a regulatory point of view, hey, it's you delegated it, but you are accountable. You need to be able to go in and look at the data, and you also need to perform quality control of who you delegated it to, right? But the other part is just like selfishly from the company or the fund's point of view, how easy can you actually cancel the collaboration with your service provider, and as you mentioned, have the data and continue an unbroken process, right, or an uninterrupted process. I think that's critical.
Yeah, exactly.
Okay, we're getting close. Maybe we can take one more question here before we end up. There's a question that says, a lot of companies are busy with KYC at the same time of the year as everyone else is. Is that a problem for the team?
So I think it would be easier to handle with managed service. Kind of we can balancing it out. Of course, we know that in certain periods we have more time, we are more busy than other times, but we can kind of plan for that, and we can have more people to take from, and balance out tasks. But of course, also with our customer, we kind of try to make an agreement where we don't end up with, have to do all the work in 1 month, and then the rest of the year we don't do anything, because we also need to recruit people, right? So we try to be extremely flexible, but at the same time, we also need to kind of make sure that we also make it possible with our recruitment strategy.
Yeah, and I think this is a problem the banks have been struggling with for years and still are struggling with, right? That is the cyclicality, and where during the year, where do you have the biggest burden, right? And I think what people often don't take into account is that there is a time lag from when you do an outreach to a counterparty till you actually get the first version of the reply and you're finished with the case, right? So right now, a lot of banks on the corporate segment, they are around 160, 165 days in delay. So if you think, okay, I need to have this done by 1st of October, you should not start 1st of September, right? I mean, you should need to start much earlier. So thereby trying to look at your portfolio of counterparties and then kind of flatten it out month by month and try to avoid these big bumps, both for the counterparties, but actually also for yourself and your team.
Yeah.
And I guess we see it also on the other side, on the response side, that there is a tendency that people with multi-banked corporates, they get all of the requests at the same time of the year, which is also a little bit silly. I mean, why is that? So one time of the year you're super busy, and the rest of the time you're busy with other stuff, right? But still. Okay, Sune, I think we are getting closer to the 45 minutes we kind of promised to keep this at, so to keep it semi-short and sweet. Maybe to part with your best advice. It doesn't have to be just one, but just in this context of how do you get started? How do you set a process up and running? What would be your best advice to people on the call?
I think basically it is to get started. So this idea about waiting for the perfect process or the perfect risk assessment and all that don't do that. Get started. You don't mitigate any risk with doing nothing. So it's kind of, you rather want to mitigate 50% of your risk than none of your risk, and then kind of build on that and take learnings, because the learning also improve the process. So that goes with the framework, with the policy, with the procedures. I think it also goes with the tools. So don't wait for the perfect perfect time where a tool makes sense. Like, just get started, because it will help you build your product over time. So I think that's my best advice. Don't overthink it. Just get started, and then you will get learning to make a better process over time.
Thank you, Sune. And I think it says something, because you're a compliance guy down to the heart, right? And then you're actually saying rather go from 0 to 80 than 0 to 100. But I think it's because you've seen it so many times that the people are in planning process or execution process for so long, but they don't just start. So actually rather go from 0 to 20, and then you're running a crappy process, because it's better than staying at 0 and keep on planning, right, and implementing. And I guess also both you and I, we've been in very large institutions, and now we are working in a smaller, in a startup where I think we've both gone through a learning phase over the last couple of years in terms of how to truly work agile, right? And I think if there's something software development and engineering can teach you, it's that part. Hey, rather do something underwhelming, learn something, and then quickly improve it. So the pace of iteration is really how you get to success, rather than you do one big bang and you think that's perfect, because it won't be perfect, because you learn something along the way in terms of your own systems, your own processes, your counterparties, how they respond, the regulatory environment around you, best practice. So to take all of that into account. Okay, I think that was the last words. Let's end it here. I want to thank everyone who participated. Thank you to you, Sune. I want to remind people this has been recorded. So we will share the recording on our website, and also email people with the link so you can hook up and review it, or even also share it with colleagues or whoever wants to see it. Thank you so much for joining. Check out our webinar and events page on avallone.io for other webinars. We have one coming up around AI and KYC with me again, but actually this time including our Director of Engineering, Ahmad, to talk a little bit about how we think about this, risks and opportunities in this space. Sune, thank you for joining, and thank you for a good conversation.
Thank you. Bye.
Bye.